If you've recently started investing, you may be wondering why on earth your investments are all in the red, whilst all the YouTubers you watch have a portfolio greener than the grass used to feed the bulls of Wall Street. It's all to do with what's happening in the total stock market. In this video, I'm going to explain why it's important to understand the market as a whole. I made a video last week explaining the stock market for absolute beginners, so I recommend you check that out before starting this video. So back in April 2020, you could have invested in almost any company and the stock value would have kept going up until about November 2021. This is a period of the stock market that men in suits like to call a bull run or a bull market. The bull run can be defined as a period of time in the market when prices are rising and are expected to keep on rising. Bull markets are exemplified, i.e. made bigger by the fact that there is a high level of confidence, by a high level of optimism, investor confidence, and expectation that strong results will continue for a long period of time. So during a bull run, investors are high on the hopes that their assets will continue to increase in price, so if they buy now, they can sell for more in the future and make a healthy profit. It is during this time when a lot of new investors start investing, because they are lulled into a false sense of security that the stock market just keeps going up. Any money that you put in now will double, triple, or whatever the promise is by looking at other people's massive gains that they have made during the bull run. Unlimited! During the 19-month bull run following the announcement of the lockdown, many new investment platforms seized the opportunity to grasp hold of millions of new investors. Free trade in particular became very popular over this time period, and they offered free shares to anyone who referred a friend or put their link on social media. During a bull run, everyone is an expert because no matter what stock you pick, the likelihood is that it will increase in value and profits will be made. There are even videos of monkeys picking random stocks that beat so-called professionals at the game. Bull runs can occur due to many different factors. The stock market always works on fear and optimism. When optimism is high, bull runs follow. When optimism is low, the opposite occurs. But the 2020 bull run has a different set of factors that set it apart from all the other bull runs. Because everyone was locked up in their homes and had free money from the government, they saw this as prime time to put their money in investments and make even more money in the long run. However, the problem is that everyone was doing this too. Due to the rise of low-cost investment platforms such as free trade, this made investing hugely accessible to almost anyone. And because there was a huge swarm of investors who saw fit to put their money in any company under the sun, the value of all these companies actually went up. Extra money fed into a company increases its stock price. This in turn increases a company's market cap. The company subsequently has a much higher valuation and it needs to keep increasing its profits to stay in line with increasing expectations. We can use an index tracker such as the Vanguard Total Stock Market Index, ticker symbol VSTAX, to track the entire stock market as a whole. Here we can clearly see the bull market of 2020. So how does this answer the question to why all my investments are now in the red? So we can use VSTAX to see the timeline of where we are in the stock market as a whole. Following the peak in around November-December of 2021, we can see that the stock market reversed course and went into what we call a bear market. So a bear market is the opposite of a bull market, and it's when stocks decrease by more than 20% for a prolonged period of time. In this period of time, there is a lot of pessimism and optimism is almost all but wiped out, meaning that everyone thinks that the value of the investments are going to go down, therefore stock prices actually go down to reflect this fact. This is because if people lose faith in having their future gains wiped out, they sell their investments and the value of all these stocks goes down. We can see that the stock market has been in an overall decline this entire year of 2022. This means that no matter what you invest in, overall your investments are going to go down. Even if you make some gains along the way, the overall trend is down. Bear markets usually occur before a bull market. We see this occur on the 20th of March 2020 when worldwide lockdowns, especially in America and Europe, were announced. During this time, investors feared that the world was going to come to an end. They sold all their stocks and investments so that they could stock up on tissue paper and excessive amounts of hand gel. Bull markets follow bear markets. So if you had invested in the 2020 bear market, it would have only taken you a month to make back all your money plus some more. This is why it's so important as a long-term investor to continue investing, especially in bull markets, and to dollar cost average as often as you can. Nobody knows when the bottom of the market is going to present itself, therefore timing the drop is impressively useless and actually quite harmful. So as a beginner investor, just know that you are investing in a bear market right now. Your investments will probably drop even more. However, come the next bull run, your portfolio is going to start flashing green like a traffic light with the bottom two lights knocked out. Make sure to check out some of my other videos and I will see you in the next video.